Hello everyone, welcome to my YouTube channel. It's your boy Charles FS. In today's video, we're going to be taking our time to look at entries. Okay, after doing your analysis, the next thing you want to be looking at is where you want to buy from or where you want to sell from. And you don't just take trade from any zone at any given point in time. You want to be specific and you know the exact criteria that you are looking for or the exact conditions that you are looking for you to take your trade. Now, as you can see right before us here, we have the pounds JPY pair here, and this market has been crazy, man. The market has been buying for quite some days now. Now, the uptrend in this market has been established. That we are sure to what we have learned in the past, that when the market is moving or the market is making higher highs, higher lows, higher highs and higher lows. As we know, this market has been retracing, but currently now it's on an impulsive leg. Now, what we are looking at to trade this market now for those who trade swing trading or position trading is that all they want to see now is for this market to pull into a little bit deeper into these zones. These are my resistance zones that are now turned support. So if the market breaks through this first support, we are expecting to turn from the second support. If we break through the second support, we are expecting it to turn from the third support. And also we can simply put up our fib and see the area we are expecting the market to turn from. Now this is where we have the 50 retracement level, and also this is where we have the 61.8 retracement level. And also currently, if you can see, there's a zone that I marked here, this other block, that's ever since the market has been on this impulsive leg, the market has not really come back to retest it. You will be surprised that this market can fall all the way down to come and retest this other block before going up. Now, for those that are trading position trading or swing trading, all they want to do is to see that the market pull into this zone before they start looking for their buys. So, but for us that are more of a day trader and intraday traders, we're going to go down to the lower time frame and see how we can be taking our trade as the market progresses. Now, as you can see, this market on the lower time frame has turned into a bearish market simply because the market broke through this major higher low. Now, what we're expecting the market to do is to make a retest, pull into this zone, and continue down. So that's what we'll be expecting looking into next week. I'm going to drop in my thoughts, a series. I'm going to be starting a series where I talk about my projection on the market every given week. I think I'm going to name it my thoughts on the market, so you can stay tuned, guys, and check it out. Now, this is what we're expecting the market to do: make a pullback, then continue down. But let's look into entries. Let's see the past price action, how would I have been able to trade them. Now, I think I started trading this market from this zone here. So, as you know, the impulsive leg has been to the upside for quite some days, and it has really been massive, guys. So, we're going to go down to the lower time frame. Now, simply after we've gotten our directional buyers, we want to be buying this market. The next thing we want to be looking at is at what point do we want to be buying, guys? At what point do we want to be buying? So, one reason why you should pay more attention, or you should be detailed about your entries, although I want to state here that there is no perfect entries. You just have good entry. There's no perfect entry, because either way you enter, you can either make profit or you make loss. It's constant, guys. But you can have good entries that can give you high reward to risk, guys. High reward to risk. For me, I personally take a risk reward ratio of 1 to 3. My reward should be 3 times my risk. So that's what I do, guys. So let's simply for this market, what you can see is that after this market made this impulsive leg and started pulling back, what you pay attention to is that there was a mini zone that was created here. There's a mini zone that was created here that the market came back to retest. Now, once the market pulled back into our zone or start making a pullback, what I do is that I go down to the lower time frame, which is my 15 minutes or my 5 minutes. These are the two time frame I use for my entries. So I go down to this lower time frame and try to see what the market is doing currently. So coming down to the lower time frame, what I want to see is the kind of structure that the market is making as it's coming down. Okay, as you can see now, the market made before the retracement started, the market made a rising wedge here, which it broke and fell. Then after which it made a high, a lower high, made a lower low, made a lower high, and also made a lower low. Fine, this is very much okay. Now these are the information that I've gathered that the market is doing. But simply when the market made this first lower high, what I normally do is that I come and put in my counter trend line and be waiting for the market to take it out. And if you have watched my previous video where I talked about trend lines, I said something that when a market is when the market wants to change direction, one thing and it breaks through a trend line, one thing you should pay attention to is the closest support or the resistance zone. For this current market now, this I'm explaining this what happened here when this market broke this this counter trend line here. Why I wouldn't have taken my trade right here. What I would have done is, okay, since the market has broken this zone, but one thing I'm paying attention to is that there is still a lower high here that the market has not taken out. So to have more probabilities in my own favor, what I want to do is to just be patient and wait for the market to come and take out this high. Assuming the market have taken out this high, taking my entries right above this high won't have been a problem. But since the market didn't take out this high, I'm going to be skeptical, waiting for this range. Okay, fine, the market didn't take out the high, but for some time we can see that the market moved. We can see that the market moved sideways. The market moved a little bit sideways for some time before breaking down. So as at this point, one thing I'll be concerned about, okay, it has broken my counter trend line, okay, and it's moving sideways. Oh, it's very good. All I just want the market to do is to break above this range, then give me a retest, then I'm going to buy. But since the market didn't do that and the market broke down, fine, it's very much okay, and the market still. But once you notice that if you go to the higher time frame, you see that the market still haven't taken out this zone here for us to be considered a mini retracement. But since, because the reason being I won't consider this a break below a change in structure is because I don't use 5 minutes to confirm my trend. Get this, guys. I use the 1 hour, 4 hours, and the daily to confirm my trend. So if I want to know if a market has changed direction, I go to the higher time frame, which is the 1 hour and all the 4 hours, or the daily, to confirm my change in direction of the market, my change in trend. But I come down to the lower time frame, which is the 15 minutes and the 5 minutes, to take my entries. So even the market closing below this my support here does not mean that the market has changed direction, because if we go back to our 1 hour, what we're going to see is a market that just came to retest this support here, and also the liquidity, people that were already buying, we also stopped that their stop loss was very close to this demand level, or this support level. We are taking out. This is what the market maker do, guys, to have enough liquidity to drive the market in the right direction. So since I know that the trend is still to the upside and this trend have not yet been changed, see, one thing you guys should pay attention to is that the fact that the market breaks below this your demand level or your support level, as long as that candle has not closed, that's why you have to wait for candle closure to have a confirmation that that structure has really been broken or not. So now you can see that this structure was not really broken, it was just a fake out. Now I'm going to go back to the 5 minutes time frame. So we continue our discussion, guys. So now with that being established, when the market now makes this lower low, lower than this other low, okay, the next I want to be looking at is this zone has been taken out. Now this zone still remain. What I'm just going to do is just to take out my counter trend line and put it here. I'm not going to use this because this now becomes the second outturn point in the trend. Remember guys, when I was teaching about trend line, if you have not watched the video, you should go and watch it. I said you take the first two outer points when drawing a trend line. At a point it was this, but when the market no longer respected it and the market broke down to continue the downtrend in this mini time frame, in this lower time frame, I'm going to extend it to this current high that was made. Now all I'm waiting for is the principle still remain the same. Principle does not change guys. Principle does not change. I'm just waiting for the market to come and take out this high, give me a retest before I buy, before I'll be thinking of buying. Because now the reason being that the higher time frame is to the upside. It's just in the lower time frame when I talked. If you have not watched my structure video, go and watch it guys. When I talked about structure within structures, this is where I was referring to when I told you that in a retracement leg you can get a mini trend in a retracement leg, but that does not mean that in that higher time frame the structure have changed. The structure have not changed, but in that lower time frame you can catch a trend in that lower time frame. That is why we can see that the market is always trending, because even in this 5, there are people that trade the 5 minutes, that focus on the 5 minutes. For them, this is already a win. They must have taken their trade and they are out of the market. People that use 2 pip stop, 3 pip stop, 4 pip stop, they are out of the market. But for those of us that at least our stock can be 10 pips, 15 pips, 20 pips, we are waiting to catch the higher trend. For me personally, I prefer catching the 1 hour trend, the 4 hour trend, or the daily trend a little bit, then I'm out. So once this counter trend line has been broken and the market has closed above it, that is where I'm not looking forward to take my trade from. And there are 2 ways you can take your trade, which is simply you can take your trade after once at the break of the counter trend line and put your stop below. Then you target whatever you want to target. Could be the next resistance zone, giving you a 2.8 reward to risk guys, reward to risk. Now but for me, mostly I prefer taking the retest, not just the trend line break, except the only time I take the counter trend line break is when the stop loss is very small, like maximum 20 pips, 25 pips. But if it's more than 25 pips, I'll wait for the retest guys. I'll wait for the retest. If after the market does not come back to retest, you just allow it go. There will be more setup in the future. Now what I'll be looking forward to is at this zone where to take my entry. Now what I'll be waiting for the retest is because I can't take this 60 pip stop loss trade. I can't be waiting forever guys. So all I'm just going to do is I'm going to mark out some key levels, which is this guys. This is my number 1 key level, which is more like another block. Then I'm going to map out the other key level, which is this guys. So the market can be so crazy that the market can come as far as down to this block here before going in our favor. The market can retrace down to this one before going on. So when the market comes here and the market starts doing some rejection, so when the market comes here, what you're looking for to take your trade is either you're looking for an engulfing or weak rejection, or for you to just know that the momentum have changed again to the bullish side. So because looking at this impulsive level that the market used to come to your zone, you'll be skeptical. So when the market comes into this zone and you see the market start ranging within this zone without being able to break it, you're going to know that okay, I think the momentum for the downward side has been exhausted. What we are looking forward now is a market that want to start going back up. So simply, you may not be able to take a trade within this first candle because I will not advise, because of this impulsive leg and there was no weak rejection to the downside. Already the weak rejection is still to the upside. So you still be, the psychological part there is that you will still be thinking that the market is still going to continue down, but the market didn't. But as this other candle here, this other bullish candle here, let me just make it bigger guys. But once this market has ranged a little bit here, like within the last 5, 10, 15, 20, 25 minutes, and finally has made another bullish candle that is closing above all the wicks. Pay attention. That's why I said in entries guys, you pay attention to details. You pay attention to details. You pay attention to details guys. See the market closing above all the wicks guys. Even as high as this, the market closed above. So all what you want to do now is to take your trade. Like me, I prefer having a constant of 15 pips, guys, 15 to 20 pips. Okay, let's just leave it at 20 pips now. And my target, basically my mental target most times is always 80 to 100 pips for GJ, because GJ can move very well. So that can give me we can choose to take it profit from this next resistance zone, or you can choose to target your mental profit, which is your risk to reward, your normal risk to reward, which can be your 80 pips or your 100 pips. 100 pips for pounds JPY is not really that a big deal, so you can easily target your 100 pips or your 80 pips. So that's one way, guys, of using a counter trade line to take your entries. The other part I want to also talk on is using structural break, your simple structural break. If at all you don't like using your counter trade line, what you can simply use is your structural break. All you can simply use is your structural break. Now let's remove this counter trend line. Then now, as the market was coming down, the same story, guys. The market broke through this wedge. Now there is a structure here. Using a structural break now, the structure that we are very concerned about. Okay, so the market was coming down. Now we'll be considering this is the structure that made this overall high. Now the market broke below this mini high, the trend line and everything. Then the market came down, but on coming down to this structure, this last higher low, it made a lower high. So this is a significant zone that you want to pay attention to, so you mark it out. Now, seeing the market closing below this place, this market has in this time frame turned into a bearish market. If you are using completely structural break as entry, the market has broken below this. So currently you want to buy in an upward market in a downtrend. What I simply mean is that currently in this time frame, this 5 minutes, like I've explained before, is that this market has now been on a downtrend going down in this 5 minutes. You don't want to start buying and start hoping that the market will come and take out this high. You just want to wait for the market. Patience is the key here. You wait for the market to take out the high, then before you now start looking for your buys. Now you're marking it out and you see that the market came to this zone and started ranging, moving sideways. What you now want to do is, okay, you mark out the high, mark out the low, as we have done before. So, and the market now make another lower low. Okay, this no longer be of interest to you. What you now want to concentrate on is the current lower high. That's what you want to pay attention to, guys, the current lower high. So the current lower high will be this, and this is the current lower low. This is the current lower low. So all you just want to do for the market to enter this trade is that you just want to see the market break above this current lower high before you take your buys, guys. Before you take your buys, that's what you just want to do. But on breaking it, and for, like I said, you can choose to enter the breakout, but me, I don't really advise, I don't really trade at breakout except your stop loss is really small. I just wait for so you can choose to now wait for the retest of the breakout. So on retesting it, then you can take your trade. As simple as that. On retesting it, you can choose to take your trade and target your 1 to 3, 1 to 4, 1 to 2, 1 to 1.5, 1 to 1 to 4, guys. You are out with 16 pips. 1 to 4 and you are out. So that's simply the two techniques I use basically for my entries. Is either I wait for the counter trend break or I wait for the structural break. Well, mostly I wait for the structural break and also the counter trend break to have a more probabilities in my favor. So it's not going to be a guesswork for me. So same thing on these, guys. You see the market also came down to, so market also came down to do the same thing here. Do the same thing here. So you are simply just waiting for the break, guys. On the market breaking, this is where the market also broke this last structural high. So on breaking this, guys, you can choose to take your entries or you can choose to wait for this retest, then you buy. This is very dicey, guys. This is very dicey. Look at this, look at this, look at this, look at this, look at this. I can be so detailed, guys. So look at this. Now if you notice one thing is that After the market broke above this last structural high, yes, we want to start buying now. On coming down to retest the last structural high, if you have not already entered here, or you can choose to enter here now and you use your 20 pip stop. If you have not already entered and you are waiting for a deeper retracement down, maybe to this zone, before you take your entries, on coming down, you see that the market also did something like a lower high. A lower high. The market can be so confusing at times, guys. So simply, I can, as at this point now, it become a deciding factor if I should choose to just enter here or here and set your pips 20 pip stop. You can, the only reason I'm saying that you can choose to enter here, because despite the fact that the market has formed a little lower high here, is because all your criteria have already been met here. But if you still want to be patient and you can, all you just need to do is to put up the trend line and allow the market to break it. At the break of it, you can enter here, then put your stop below. Simple as that. Or you can still wait for the retest before you enter. But at the break of it, you can choose to enter. Are you getting it? So that's just it, guys. As simple as that. Practice makes it simple, guys. It's not that simple. Let's not over exaggerate things. Yeah, it's not that simple. It takes a while for you to master your emotions and master yourself to be able to produce more results. Even the best of us is still in the process of mastering our emotion, because emotion is something that is always there, guys. Emotion is something that is always there. And bulk of the losses in this market is caused by emotions, guys. It's caused by emotions. So okay, a perfect example of what I just explained just now is this, and this one was really major. After the market broke this counter trend line and broke this structure up, what you are waiting for is a retest of it before you buy. But on retesting it, if you haven't taken your trade here, which would have been a loss, see, there is nothing bad in losing the market, guys. It's part of the game, and that's one thing you should know, and you should let it be something that you have accepted within yourself, that losses is part of the game, guys. Losses is part of the game. But your reward to risk is one thing that's going to make the difference in the market. There's nobody that gets 100% right all the time. So upon taking this loss here, or by the time upon entering the market and see the market start on breaking structure down in your retracement leg or in your entry leg, all you just need to do is to do the same, guys. It's the same thing. You keep doing the same thing over and over and over again. That's what brings the success. Yeah. So you put out your trend line, you start marking your structure again, so you'll be able to keep track of exactly what the market is doing. So upon making this structural high, making this equal low, you can choose to adjust your counter trend line to this point, and all you just want to do, because this is the entry leg, what you just need to do is a retest, is a breakout, then you can take the trade. On waiting for the retest, you may not have gotten a retest to buy, but if you have entered at the breakout, you would have made some money. But whether you get an entry or not for the retest is not a big deal, guys, because if at all you miss this setup, that setup is still just around the corner, guys. It's just around the corner. You give yourself a day, you're definitely gonna get an entry, guys. You're gonna get your setup. So the goal here is for you to be disciplined with your 20 pip stop, and you are good to go, guys. Your 20 pip stop, and you are good to go. So you target whatever you want to target. You want to tell and you are good, guys. So this is just to keep repeating the process over and over and over again. So you broke your mini structure here. Broke your mini structure. Give you the retest, and man, you are good to go. You are good to buy, man. But look at this, guys. In this zone, if you had to go with it, it didn't really give you an entry. So for those that trade the breakout, would have been the one that really called this market. But for those that don't trade breakout, they would have missed this. But whether you miss it or not, it's not really a big deal, because your next trade is still going to be just around the corner. Now let's take a little bit look at the current market chart, how today really played out. So let's take a look at it. Okay, now the market broke below. Let's do just a simple analysis, which I did this one. The market broke below this structural low. Okay, let's start from here. The market broke below this mini structure, and if you go to my Instagram, you'll see that I made this projection on GJ before it happened, guys. I said GJ was going to come down to this zone. I posted the chart. You can go there and make a new high, but GJ never made that high, but made equal high upon coming down. But at the time I made this projection, this market was just here, so it was something like this that I did. It was something like this that I did, guys. So I was targeting 15900, expecting the market to come and make a new high, but the market never did. But now this is where you start adapting to the market, guys. Nobody owns the market. The market can do anything that you want. All you do is to trade your system in the market. The market can choose to misbehave, go up or down or sideways, guys. You can do its thing. All you just need to do is to find out, to be profitable, all you need to do is to find out that your setup in it, and discipline yourself to always be able to wait for your setup to happen before you trade, guys. Not just taking a trade randomly. So that's why I said the emotional part is still one major factor in the market that we keep mastering. So upon this, the market broke above, made a new high, mini high, and okay, I became skeptical about this my zone that I made, but I knew that if the market is still going to come down, the market is still going to respect it. So I kept the level on. So upon the market coming down, the market broke through it, and okay, I knew that in this we started a mini retracement leg in the 1 hour time frame, which I told you is my I use it more for my directional bias. Then I came down to my 15 minutes and my 5 minutes. For a 1 hour setup, I basically use 5 minutes, guys. 1 hour setup. For 4 hour setup, I use 15 minutes and also 5 minutes anyway. So what you want to see is when the market did that, what I simply did was just this. As simple, guys. What I simply did was just this. So at the point it was this, but when the market didn't, when the market failed to break above this high and made a push down, all I just did was to adjust it this way. So the market broke above it, then came back for a retest, and you see the market make a new high. So market made a new high. Although I was expecting to continue, the market didn't and broke down. So this is where you just start watching, guys. Upon closing below, we saw in the 1 hour that it closed below. All I was now looking at was this my zone. This my zone here. So what I simply just did was, since market broke structure when it was coming down, I did just want to enter directly from the other block. If not, I would have simply just set my order and allow it to play out. But what I did was, I just did this, and a break of the counter trend line and a retest of it, that's when I entered my trade. So the market just simply ran to the high. I was still expecting to break above, although there was also an other block here. There was also another block here, and the market came to respect. This was the other block the market came to respect before it fell. Simply what you do is, although it was in the night that this market formed and I wasn't able to trade it, what I would have done would have just been this, and see the market break below, or a retest of it, you can take a trade, but I wasn't around to trade that. But on today's trade, the market was really dicey today, guys. So as I was explaining before, the market broke below this zone here. So upon confirmation that the 1 hour has closed below this place, has broke below this my trend line, my inner trend line. See, go and watch my video on trend line so you understand what this is. This is my inner trend line. I talked about trend line within trend line, so you can really grab what I'm talking about. This was a trend line that was established long before, and the market came to respect it, and now break below it, closing below it. Now I knew that, okay, first criteria was that market has broken below my trend line. Now gathering the evidence in my favor. The market also did a mini structure here, a mini higher low here, and also broke below it, came back to retest another block and broke below my inner trend line, sorry, and now closed below my inner structure here. Then I became skeptical about this major zone that I had here, because it now looks so much to me that this zone is going to be broken. Now the last thing I did was that I drew this scatter trade line. Now as at the time I woke up, this was 4 in the morning, this was 8 a.m. Nigeria time. What I saw was that the market has come to break my counter trend line. So simply the process still remains the same, which is on the break of the counter trend line, what you want to do is, what you want to see the market do is either, like I said, you can enter at the break of it, or you can enter at the break of it, in which case this stop loss would have been very wide, or you can simply just wait for the retest, guys. So the retest would have now been something that would have given you a better risk to reward ratio. So let's go to our lower time frame. This would have given a more better risk to reward ratio. So as you can see, the market broke through this major 4-hour zone here and down to our resistance that's not turned support. So that's it on entry, guys. I hope you've learned a lot, and if you have any questions, please be sure to drop it on the comment box below, and I'll be sure to respond to you. Please subscribe to my YouTube channel. Support me by subscribing. It's free, so you actually only paying to subscribe. So just hit the subscription icon there and please subscribe, guys. So thank you very much. See you in the next video.